Hello and welcome to Ticker Trader. So by now hopefully you have an account. You may be new to Ticker Trader. I'm going to assume you know how to log in. If you don't, you can sign up for free. You'll get a Pro Trader account for 30 days. It's not going to cost you anything. You can view all of the trade signals and indicators. You can view our market strength dashboard, and you can participate in the forums, and you can create a watch list, all those things. So if you don't have an account, it's completely free. After 30 days, you'll get a basic free account if you don't want to pay for it. So let's log in. And straight away, we go to the signals homepage where you can browse signals by stock index. I'm going to presume you've watched the video, you know how to do this already. So let's pick one that has some signals today. There we are. And we've got pages and pages of them for you to go back, look at historic data, filter a stock. You know how to do that. So let's go straight on to our state of the market. So we have at the moment 5 charts. There will be more, and we can change the period. We'll go with 6 months, and you start to see blue and red over a 6-month period for the key indexes. So we've got these S&P 500, FTSE 250, FTSE 100, the CAC and the DAX. So the Nasdaq is going to be on there pretty soon. We're going to have the Nikkei and the Hang Seng, which is going to give us an indicator of the strength of global markets and a current position. So let me tell you what this means. The blue means that we have each blue line or blue block is a number of buy signals generated in that stock index for the day that we have here. These are days, each bar is a day. And the red is a sell signal, different levels of indicators for the signals generated on the days. So what this is telling us, this chart, is on a given day here we have over 90% buy signals and less than 10% sell signals. So what it's telling us is the algorithms which generate the signals are suggesting that the market is oversold and there are some buying opportunities. And we can look and we can see that a pattern follows where there are buying opportunities, and as those buying opportunities start to make the market move in terms of price increases or stability, then we see less buying opportunities and we start to see sell indicators here. Sell signals made up of sell indicators, and then we can see peaks and troughs, and we can see a big swing here. So this is telling us that at the bottom here there are less buy signals being generated by the algorithms. What we can notice and read from this is actually the number of buy signals has dropped, but the number of sell signals has stayed pretty consistent. So the market hasn't dropped significantly enough for the algorithms to generate more buy indicators here, but it hasn't risen sharply enough to generate many level 3 and level 4 sells. They're predominantly level 2s with some level 3s and just 1 or 2 level 4s at the top here. Look, in the darker red. You can see on the legend here what I'm looking at. So this tells us then that in this period the market starts to become oversold on some stocks, and the algorithms are starting to detect buy opportunities on a daily basis, and it's consistent in how it rises as there's a sell-off in the market. And the algorithm is saying, right, the sell-off has reached a point where it's detecting buy opportunities, until we get to this point here where on one day it didn't detect any sell opportunities at all in the entire FTSE 250, and consistently over this period, it was over 90% the number of buy opportunities. So the algorithm is saying the market is oversold. However, you have to bear in mind the algorithm is based on technicals. It's based on the stock price and the historic data for that stock, and whether it sees any large movements or volatility as a buy or a sell opportunity. But these charts don't take into account geopolitical events such as war, disease, commodity crisis such as oil and gas. But what it does do is give us a very good idea of the movements in markets. And what's interesting is if we look at the S&P 500, which has a bigger stock sample of 500 members as opposed to 250 here, we still see a very similar pattern. And we can see that whatever was driving the FTSE 250, it's been driving the S&P 500 in almost the same direction over the same period. The CAC has less members in there, so the average is made up of a smaller number of stocks. We can see the same pattern, but it's a lot bolder. The biggest swing from sell signals to buy signals, and then we can see a bit of a transition period down to 100% sells and then back up to 100% buys. And when we look at the DAX, we can see there is some correlation between the other charts, but again it's only got 40 members, and we can see that there's a big transition from sell signals to buy signals to sell signals to buy signals, whereas here we can actually start to understand where the sell-off is in the market, where the buying is in the market. So a lot of buys and a sharp spike in a stock price will detect, the algorithms will detect a selling opportunity, and it will generate sell indicators, and those sell indicators, when there's more than two of them, will create a signal. So that is how you read the state of the market using purely statistical analysis of the current price and the changes over a given period of time. I hope that was helpful, and I hope it helps your research in when you decide to buy and when you decide to sell.